All right, now let's talk about how to trade bearish and bullish pennants. Pennants are similar to rectangles in that they are a continuation pattern that forms after a strong move up or down. After a big move either up or down, the buyers or sellers pause to catch their breath before continuing to take the pair even farther in the same direction. When the price is consolidating, you can see it forms a tiny triangle that we call a pennant. During this consolidation period, new buyers and sellers jump in on the action, and that starts to move price one way in a strong move. Let's start off talking about bearish pennants. A bearish pennant would be a pennant pattern that's formed during a steep, almost vertical downtrend. So you can see here, it was really moving down really hard. And then what happens is when there's this steep, almost vertical downtrend, some of the sellers start to close their positions while some other sellers start opening new positions. So this is what causes this consolidation period for a little while that forms this bearish pennant. As soon as those sellers start opening new positions, the price breaks below the pennant, like you can see here, and continues to move down. So how would you trade this pennant? Well, what we would do is we would place a short order. We could do a sell stop or simply go short as soon as it breaks down below this pennant. And then we can place our stop loss here above the pennant in case it's a fake out and we need to get out of the trend right away. So if it broke below here, but then all of a sudden shot up and it faked us out, then at least we wouldn't lose too much because our stop loss would be right here. Now, setting the take profit is a little bit trickier because usually with pennants, the breakout's going to be much stronger than other patterns that we've talked about up until now. So usually we'll hit the height of the earlier move, and you can use that to kind of estimate the size of the breakout move. So for example, here you can see it was a pretty big move here, and right after there was a strong move down this way, about the same height as well. You could have put in your take profit right here, or of course you can always use a trailing stop as well. Now, the bullish pennant is going to be the complete opposite of the bearish pennant. A bullish pennant means the bulls or bears are taking control again. So what we're looking for is a steep climb in price like this, and then a period of consolidation when the bulls are taking a small break, and that's what would form the pennant right here. Then we would expect a strong move upward after the breakout of the pennant. So what we would do if we saw bullish pennant forming is place a long order or a buy order right here. So it could be a buy stop, or you could click buy once you see it break out. And then we would place our stop loss here below the pennant in case it was a fake out and came up here and then all of a sudden shot down. That way we wouldn't lose too much on that trade. And then same thing for the take profit. You can see here the same distance as the uptrend before the pennant formed. We can use that same distance here for the take profit. And you can see we would have hit our take profit if we had done that. So pennants are an awesome tool for you to make a lot of profit since they're usually these big moves. And hopefully you can use this information to spot these pennants in the market and catch these big moves before they happen. So in the next section, we're going to talk about the last chart patterns, which are called the triangle chart patterns.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.